Do you think buying a house in the United States is impossible if you have a low income? What if I told you that thousands of families with average jobs, small savings, and even bad credit are becoming homeowners every single year? Most people spend their entire lives paying rent because they believe buying a house is only for rich people. But the truth is, the U.S. government, banks, and housing programs actually offer multiple ways for low-income individuals and families to buy a home with little money down, lower monthly payments, and sometimes even financial assistance. In this video, I'm going to show you the exact step-by-step process to buy a house in the USA with low income in 2026. I'll explain the programs, the requirements, the hidden tricks, and the biggest mistakes people make that stop them from getting approved. So make sure you watch this video until the end, because one piece of information here could literally save you thousands of dollars and help you finally own your dream home. Let's get started. The first thing you need to understand is that low income does not automatically mean you cannot buy a house. Many people think banks only approve wealthy people, but lenders mainly look at whether you can manage monthly payments responsibly. Even if your income is small, you may still qualify through government-backed loans or first-time homebuyer programs. In fact, many programs are specifically designed to help people with modest incomes become homeowners. The second thing you need to know is your credit score. Your credit score is one of the most important factors when applying for a mortgage. A mortgage is basically the loan you take from a bank to buy the house. In 2026, most lenders prefer a credit score of at least 620 for conventional loans, but some government programs like FHA loans may accept scores as low as 580 or sometimes even lower with additional conditions. If your credit score is bad, don't panic. Start by paying your bills on time, reducing credit card debt, and avoiding unnecessary loans for a few months before applying. Even a small improvement in your score can increase your approval chances dramatically. Now let's talk about one of the biggest fears people have, the down payment. Most people think they need 20% of the house price saved up before buying. That is not true. Many first-time homebuyer programs allow you to buy a house with only 3 to 3.5% down, and some USDA and VA loans even offer zero down payment options. For example, if you buy a $200,000 house with a 3.5% down payment, you only need $7,000 instead of $40,000. Some states also provide down payment assistance programs that can help cover part or all of this amount. The next step is understanding the different types of home loans available for low-income buyers. The first and most popular option is the FHA loan. FHA loans are backed by the government and are ideal for people with lower income or lower credit scores. They require smaller down payments and are easier to qualify for compared to conventional loans. The second option is the USDA loan. This is one of the best programs for low-income families because it allows zero down payment. However, the house must usually be located in eligible rural or suburban areas. Many people are surprised to learn that lots of suburban communities actually qualify for USDA loans. The third option is the VA loan, which is available for veterans, military members, and eligible spouses. VA loans often require no down payment and no private mortgage insurance, making them one of the most affordable mortgage options in America. Another important step is calculating how much house you can actually afford. Just because a bank approves you for a certain amount doesn't mean you should spend that much. A smart rule is to keep your monthly housing costs below 30% of your monthly income, if possible. Your housing cost includes the mortgage payment, property taxes, insurance, and maintenance expenses. Many first-time buyers make the mistake of focusing only on the monthly mortgage and forget about additional costs like repairs, utilities, and homeowners association fees. Being realistic with your budget will help you avoid financial stress later. Once you understand your budget, the next step is getting pre-approved for a mortgage. Pre-approval means a lender reviews your financial information and tells you how much they are willing to lend you.
This step is extremely important because sellers take pre-approved buyers more seriously. To get pre-approved, you'll usually need documents like proof of income, tax returns, bank statements, employment verification, and identification. Even if your income is low, Having stable employment and organized financial records can significantly improve your chances. After pre-approval, it's time to search for the right house. This is where many people become emotional and make expensive mistakes. Don't rush. Look for a home that fits your budget, is located in a safe area, and has reasonable maintenance costs. Sometimes buying a smaller starter home is smarter than trying to buy your dream house immediately. You can always upgrade later after building equity and increasing your income. Another important tip is to hire a good real estate agent. A professional agent can help negotiate the price, guide you through paperwork, and help you find homes that qualify for government programs or financial assistance. In many cases, the seller pays the agent's commission, so having an agent may not cost you anything directly. Now let's discuss closing costs, because many buyers forget about them. Closing costs are additional fees paid during the final purchase process. These costs may include loan fees, title insurance, inspections, taxes, and legal paperwork. Closing costs usually range from 2% to 5% of the home price. However, there are ways to reduce these expenses. Some assistance programs help cover closing costs, and sometimes you can negotiate with the seller to pay part of them. Always ask your lender and agent about possible assistance options, because many people miss opportunities simply because they never ask. One of the smartest things low-income buyers can do in 2026 is explore first-time home buyer assistance programs. Almost every state in the U.S. offers some type of housing assistance program. These programs may provide grants, low-interest loans, tax credits, or education courses that help buyers qualify more easily. Some cities even offer special incentives for teachers, healthcare workers, police officers, and other essential workers. Researching local programs can make a huge difference in affordability. Another major factor lenders consider is debt-to-income ratio, often called DTI. This measures how much of your monthly income goes toward debt payments. If you have too much debt from credit cards, car loans, or personal loans, lenders may worry you cannot handle mortgage payments. Try to reduce unnecessary debt before applying for a mortgage. Even paying off 1 or 2 credit cards can improve your approval chances and help you qualify for better interest rates. Speaking of interest rates, this is another area where small changes can save you huge amounts of money. Your interest rate affects your monthly payment and the total amount you pay over the life of the loan. A lower interest rate can save tens of thousands of dollars over 30 years. That's why improving your credit score and shopping around with multiple lenders is so important. Don't accept the first offer immediately. Compare rates, fees, and loan terms carefully.
Now, let's talk about something very important that many people ignore: emergency savings. Even after buying a house, unexpected expenses can happen. The roof may need repairs, appliances can break, or medical emergencies might occur. Try to keep at least a small emergency fund even after paying your down payment and closing costs. Owning a house is a long-term responsibility, and financial preparation is essential for stability. Another helpful strategy for low-income buyers is considering multifamily homes. In some cases, you can buy a duplex or triplex, live in one unit, and rent out the others. The rental income can help cover your mortgage payments and reduce financial pressure. Many successful homeowners started this way and eventually built wealth through real estate. It may not sound glamorous at first, but it can be an incredibly powerful financial move. Let's also discuss common mistakes that stop people from getting approved. One major mistake is changing jobs right before applying for a mortgage. Lenders prefer stable employment history. Another mistake is making large purchases like cars or furniture before closing on the house. New debt can lower your credit score and change your financial profile. Some buyers even get denied days before closing because they opened new credit accounts. Avoid major financial changes during the mortgage process.
Communication is also extremely important. Stay in touch with your lender, respond quickly to requests for documents, and ask questions whenever something is unclear. Buying a house can feel complicated, especially for first-time buyers, but staying organized and proactive makes the process much smoother. Remember, many people who own homes today were once nervous first-time buyers too. In 2026, technology is making the process easier than ever. You can compare mortgage rates online, attend virtual home tours, use affordability calculators, and even complete much of the application process digitally. Take advantage of these tools to educate yourself and make smarter decisions. The more knowledge you have, the more confident you'll feel throughout the process. At the end of the day, buying a house with low income in the USA is absolutely possible if you follow the right steps, improve your financial habits, and use the assistance programs available to you. Don't let fear or misinformation stop you from pursuing homeownership. Every expert homeowner was once a beginner who had doubts and questions just like you. The key is starting early, staying disciplined, and taking one step at a time. Your dream home may be much closer than you think. If you found this video helpful, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss future videos about money, real estate, and smart financial strategies. And comment below with your biggest question about buying a home in America, because your question might be featured in the next video. Thanks for watching, and I'll see you in the next one.